morning and welcome to the Canaccord Coffee Break podcast. I'm Jane Parry, the Chief Marketing Officer here at Canaccord Wealth. And today I'm delighted to be joined by Tom Hibbert.
Morning again, everyone.
Morning. And Tom, I'm not noticing your Halloween wizard's outfit this week.
I do look a lot like Harry Potter, actually.
You do a little bit.
So
yeah, you do a little bit.
I'm in dress naturally.
So I was going to get a pumpkin spice latte to get us in the mood for today, but really far too sweet for me. So still on black Americanos. But I am thinking about all things that we could be scared about in relation to the economy, the markets, and what might be happening to tricks and taxes in the UK budget next month. So in this Halloween edition of the podcast, we're going to be talking about inflation, death, and taxes. Now there's a cheery subject for us. So if you've not listened to the podcast before, the idea behind it is we take our weekly markets review, which is sent out to subscribers on a Monday weekly, and we deep dive into some of the more interesting areas to get a better understanding from Tom. So grab your coffee, plug your ears in, and listen in for about the next 10 minutes to hear a little bit more about what we think is going on. So this week has been all about inflation numbers.
It has indeed.
Both here and in the US. And perhaps not as scary as it might have been.
Absolutely.
As I understand it, UK inflation undershot expectations, sparking a rally in gilts, or UK government bonds as we know them, and also small and mid-cap equities, which were all priced in an increased probability of the Bank of England cutting rates. US inflation also came in lower than expected, boosting expectations of a near-term Federal Reserve rate cut, possibly even this week.
Absolutely.
So first off, Tom, perhaps we can just have a little look at the UK inflation situation and just give us some of the facts and figures and what's going on.
Sure. So we've obviously been in an inflationary cycle.
Yeah.
Inflation has been too high.
Yeah.
And in the UK in particular, it's been persistent. And so any fall in inflation is fundamentally good news. And last week, we saw quite a significant downside surprise in inflation. So month on month, it came in at 0 versus expectations of a rise of 0.3%. So quite a significant surprise to the downside. That pushed annual inflation down to 3.8%. Still well above the Bank of England's target of 2%, but it was expected to come in at 4%.
Okay. Wow. Okay.
But why this was a particularly strong surprise is that it seems to have come with a bit of a tone shift around the whole inflationary narrative where we are in the cycle. It seems like we might be at a bit of a turning point where we start to see a more consistent downward trend in inflation from here. So economists, including those at the Bank of England, think that this print marks the peak of inflation in this cycle and that they see it slowing to about 3.4% by the end of the year and then to 2.5% by the end of next year, with a really sharp deceleration starting in the spring.
Okay, great. So still higher than the target 2%, but downward trajectory.
Exactly.
Okay, so I mentioned the positive impact on the markets. Can you just tell us a little bit more about how the markets reacted to this?
Sure, markets reacted really positively. They loved it. And traders rushed to price in the higher probability of interest rate cuts from the Bank of England this year. And it was also combined with other positive economic surprises. So there was a spike in retail sales, which was expected to be negative. It actually came in quite strong. And then economic activity, as measured by purchasing manager indices,
right,
they also showed some stronger economic activity in the UK. So slower inflation and stronger economic performance is obviously a good thing. And that triggered a broad rally across UK assets. So mid and small cap equities, that's the more domestically focused part of the equity market, jumped 3.2% last week, led by cyclical sectors, particularly energy, which was also supported by a rise in oil prices. But it wasn't just equities. The UK government bonds performed very well too, adding to an existing tailwind in the UK bond market at the moment. So the 10-year yield fell from 4.75%, or it has fallen from 4.75% on the 9th of October, so earlier this month, down to 4.4%, 4.43% today. And bond yields fall when prices rise.
Okay, so when you say gilts have rallied, but yields have fallen.
Yeah, bond
Just
yields
tell me
falling
that.
is a good thing.
Yields falling is a good thing.
Exactly.
Okay, right. So inflation's still high at 3.8%, still above target, but we are seeing some cooling in certain sectors. So talk to me a little bit more about those.
The big inflation driver in the last few years has been core inflation, really services. So that's things like more domestic demand, wages, and the core stickier components of inflation. And we're seeing more signs of cooling there, which is a better measure of the actual sort of fundamental trend of domestic inflation, domestic price pressures in the UK.
Is that because the service industry it's primarily you're paying, the cost base is people's salaries?
Yeah, which is more entrenched, isn't it? So the volatile components of inflation, things like energy and food, go sort of up and down quite a lot, and there's volatility. Within services, wage growth, things like that are more sticky.
Okay.
So that is often the measure that people look at, and particularly in the UK, where services inflation has been so sticky in recent years, it's good news to see some evidence of further cooling there.
Okay.
So the risk from my perspective is that cooling in core inflation means that the risk of another flare-up of inflation in the medium term has sort of faded a little bit.
Right.
Certainly not off the table. It's not a negligible risk. We could have a fresh geopolitical issue arise, a spike in oil prices, whatever it may be, that could change the picture. But for now, it seems like the direction of travel has become a bit clearer.
Okay. So apart from that, what else is contributing to this lower than expected inflationary outlook?
The other thing that I think markets are focusing on at the moment is the fiscal trajectory. The fact that,
i.e. taxes, what taxes are going to come down the line.
And the outlook for growth, and is the UK economy stagnating? The fact that we have the government's quite one-dimensional policy approach at the moment. They seem to be very focused on simply raising taxes, and that is without sort of really looking at tackling long-term entrenched non-discretionary spending, and that's weighing on incentives to work. And incentives to invest, and it's creating a bit of negativity around the UK economy, I think, which is feeding through.
Yeah. So in Halloween week, that might be the thing that's a little bit scarier, maybe.
Yeah, definitely a bit scarier. Yeah, it's topical. So some economists argue that the UK might be on the wrong side of the Laffer curve.
Oh yeah, I've heard about the Laffer curve.
So if you tax someone at 0%, you obviously raise zero revenue. If you tax someone at 100%, you also raise no revenue because you disincentivize work entirely. So the optimal tax point is somewhere between 0 and 100, which isn't really saying much, to be honest. But the idea is that, and even Arthur Laffer himself said that the UK is taxing itself to death, and that further tax hikes won't necessarily produce greater
revenue for
the government. In fact, it could produce lower revenue and slow down growth.
So we've covered what's been happening in the UK inflationary and economic environment. Is there a similar undershooting of inflation in the US? And what's the story there?
On the surface, it's similar, but actually, once you dig into it, it's quite different.
Okay.
So US inflation came in at 3%. It was just a touch below expectations, so not as big a surprise as what we saw in the UK. And also, it was the more stubborn services components, core inflation, that showed signs of easing. And that was enough to drive a strong equity market rally and also for the US government bond yields to fall as well. But the backdrop in the US is quite different from the UK.
Okay, go on, explain that then.
Yeah, so inflation is cooling, but the economy in the US is still running really quite hot.
By hot, you mean?
Growth and earnings still very strong.
Okay. So very different from the UK.
Exactly.
Yeah.
And the Federal Reserve is pointing to some weakness in the labour market, and that's what they're using to justify these rate cuts. But I actually don't see the same weakness. There are good reasons to explain some of the weakness that we've seen. For example, immigration has effectively gone to zero, so labour supply is a lot lower. That means that you need fewer job creation to maintain low unemployment, and the unemployment rate has still remained quite low. So the evidence for labour market weakness is quite murky. The Federal Reserve meets this week, and they're widely expected to cut rates. They're almost certain to cut. and they're framing it as insurance against this what they perceive as weakness in the labour market. But I think that the US is actually cutting into strength rather than weakness, and that means that it could risk rising or stirring inflation again, which poses longer term threat, particularly if the Federal Reserve is cutting rates under political pressure rather than a real economic justification for doing so.
Okay, understood. Right. Well, I think I should sum up what's in my Canaccord Halloween takeaway coffee cup this week, and definitely not a pumpkin spice latte. But what we've said is inflation in both the UK and the US are both still above target, but crucially lower than expected, giving markets a little bit of a disinflationary sugar rush. In the UK, the situation is quite different from the US, and this is partly as a result of a cooling economy, weaker demand, higher taxes, dampening momentum and work incentives. We think maybe the real Halloween trick could come in next month's budget. The government's, tricks or taxes approach may end up squeezing growth without actually boosting revenues. And we are just wondering whether it's shaping up to be a bit of a Ghoul Britannia. Let's hope the Chancellor's got those treats lined up, not just the tricks.
Absolutely.
All right.
We'll see.
Thank you very much again for your time, Tom. I hope you enjoyed the Canaccord Coffee Break podcast and we didn't scare you too much. But if you have any feedback, please do email us at coffeebreak@canaccord.com and we'd love to hear from you. Thank you very much.
Investment involves risk. The value of investments and the income from them can go down as well as up, and you may not get back the original amount invested. Past performance is not a reliable indicator of future performance. The information provided is not to be treated as specific advice. It has no regard for the specific investment objectives, financial situation, or needs of any specific person or entity. It is accurate at the time of recording and is subject to change.